journey of Detroit.
Oh no, we're not watching any ads. No ads for me. Not even if I'm the one watching them. Looks good. Oh. Boom, boom, boom. Let's see. Mic check. Very nice. Whew. It's cold out there. Oh my god. Alrighty. Well, for those of you guys who are live, which I think right now we don't have anybody live, and for those of you who are going to be watching the VOD, which I see a good amount of you people are watching the VOD, okay? So I'm going to keep doing the timestamps. I'm going to try to make this one a little bit shorter, so this way, you know, there's not as much crazy stuff, but good to see you guys are here. So thank you so much if you are one of those people watching the VOD, video on demand. Appreciate you, for sure. Oh, gather. Man, it's freezing outside. All right, so let's talk about it. So I titled this, I just wanted to talk about the stock market a little bit. So getting started in the stock market is sometimes scary. You know, a lot of people are really afraid when they first get started. They're not sure what they should be doing. They're not sure how much money should they allocate towards their portfolio every single week, every single month. And it just seems like everyone tells you that, oh, the stock market is legal gambling. You're going to put your money into there and it's just going to evaporate before your very eyes, right? And this is what we've heard forever. I mean, up until recently, up until about 2020, when everyone started getting excited for the stock market because, well, the Federal Reserve was money printing, which means the stock market was going up. So, of course, everyone was a genius. Everyone threw some money in and they made some money. But now that we're shifting to what looks to be a long-standing bear market, could even last another couple of years, we're starting to rethink the whole stock market strategy that we once did believe prior. Saying true. Sorry. Andrew, and I'm still gonna say Sandrew, even though I know that your name is Andrew, but we'll call you Sandrew still. Good morning or afternoon. I guess afternoon, 12, right? And thank you for being here. And we're kind of just, I figured for these, I'm just gonna do a straight like stock market talk, or no, any talk, whatever I decide, whatever we feel like talking about for the day. Do that for the first 20 minutes, and then we'll get into some questions, and we can roll like we usually do. Um, almost like it's a video. I've been thinking maybe I could return it into a video, but I'm not sure. But thank you for being here. So so as of right now, the Federal Reserve is now starting to take money away from the money supply, even though there are some stats out there that show that they're actually increasing liquidity. At least on paper, they're mentioning that they're going to be cutting some money from the monetary supply. So that essentially means when there's less money, people also have less money and they also invest less money. So that means the market is going to continue to go, it's not going to rise as fast as it once did when everybody had money like in 2020, right? So that's kind of the nature of what's happening right now. Plus, we have a high interest rate environment, which is not good for any companies that deal with debt. We're talking car companies, even real estate, stuff like that is going to be going down dramatically, supply and logistics, because taking out loans is just way too expensive. So of course, businesses are going to be cutting prices to increase some demand because consumers don't have that money to be paying that extra premium anymore. So that cuts the margins down. Plus the logistics is more expensive, so that's going to be cutting the margins down. So we're in an environment right now where we're really trying to. Most companies are really trying to trim the fat. If there's anybody that has, an excess of employees, like we just saw, Google is laying off 15,000 employees, or was it 15%? They're laying off a ton of people. Amazon also laying off some people. Big companies are starting to do layoffs because they're trying to trim the fat to save as much money as possible, so this way they can weather the recession, and they'll be having more pricing power, or PP. So this way they can actually lower prices, keep demand high, but also kind of have a cushion of margin by unfortunately letting those employees go. You have that cushion of margin that you can still make profit on all the products that you're selling. So it's one of those things where not a great time to necessarily be an investor. I mean, it just seems like it. Over the last year, we've had just nonstop downtrend, and it's for many companies. I mean, Amazon's down 50%, Tesla is down 70%, which that's great for me, um, and, um, and many other things. Many other companies like What else? In Google, even Google's down a good, I think Apple's down a good 30%, something like that. And then forget it. For these high PE ratio companies, ones that have high price to earnings ratios, because you're factoring in so much growth for the future, these companies are getting hit the hardest, absolutely. And this is a lot of spec stocks, a lot of electric vehicle companies, of course, that have not delivered necessarily, but they have good plans for the future, and really all automotive companies as a whole. So it's a big mess that we're in right now. But that's not the main point of what we're talking about today. Today we're just talking about how to actually get started within the stock market. And the first piece of advice that I give to anybody is just to get educated. I mean, it seems like a cliche, right? It's like, oh, I'm going to pay for courses, or I'm going to go through YouTube videos. Man, when can I actually take action? But the problem is, if you take action without actually having all of the knowledge to back it, you're going to be losing money, and you're not going to realize why you're losing money, and then you're going to get too afraid that you're losing money, and you'll pull it out and you say, you know what, the stock market's not for me. So the first thing I advise everybody to do is just to get educated. That's all I did from the ages of 19 to, I guess, now 25. I've done nothing but just watch videos on the stock market. What is a balance sheet? How to read a balance sheet? What is a market capitalization? What's a PE ratio? What are just income statements? What's operating margin? What are the debts? What are accounts receivable? Just every different term you could possibly think of. What is this? So this way I can better value companies in the future that I may or may not want to invest in. And then I have better security because I know everything in and out. This is why it's going down. Like right now, everything's going down. I'm like, okay, so I could see that it's this or this and this. It's not just some wavy witch out there waving a wishbone saying the market's going to drop, it's going to go down. So it's good to have that awareness of what is the stock market in all of its terms before actually investing. But I get it, some people don't have the time and they can't invest that time in themselves to learn every term that's out there. But one thing you could always do, which I think it's very important, is, and I'm realizing my thing's a little bit off. Let me fix that. One thing that I advise a lot of people to do is actually get educated. But if you're not going to get educated beforehand, if we're talking about the psychology of the stock market, I usually advise people to just get started, which would mean maybe putting in $100 in your favorite company. Doesn't even really matter what it is, I'll be honest. Like if you're a person that really likes guns, I don't know, put it in I guess Cabela's is not a stock anymore, right? I'm forgetting which gun companies are actually out there. Or if you're really into skin and healthcare, maybe let's go into Ulta Beauty. If I'm someone who just loves Amazon, I use Amazon so much, let me just invest in Amazon. Put $100 in. It's not like you have to buy an entire share of a company. You could buy fractional shares. So this way you could actually get started. And what this is going to do psychologically to you is you're going to see that $100 that, maybe you worked 8-hour day to actually earn. You're going to put that in there and you're going to see it drop a little bit, or you're going to see it grow a little bit. Either or, you're going to have a visceral reaction in your body that's going to state like, whoa, you know, oh my God, like what's going on? It's moving up and down. And what, oh my God, I made $5 today, but wait a second. The next day I lost $5. What's going on? And that visceral reaction will lead you down a path of trying to learn what exactly is going on. So I think if you're not going to educate beforehand, you're better off throwing some money in, so this way you have some personal stakes. If you're just constantly watching on the sidelines or just paper trading, which paper trading has its own benefits and whatnot, then I don't think you're going to get the full brunt of the emotion of losing that money. Like I remember putting my first $150 in, and I remember that emotion I had from just putting the money in. I think I bought Redfin. I thought Redfin was a good buy at that time. I didn't do any due diligence. I was like, well, Redfin's pretty good. I'm looking around at houses, and it seems like they have a good thing going on. And I think Elf Beauty was the second stock I ever bought. Elf Beauty, because I watched a financial education video, and he mentioned that Elf Beauty was it was doing well and it had good margins, and it was getting put in more and more targets and stuff like that, which did end up being a good investment if you had held that throughout that time from 2019, 2020, and beyond. Cut. Andrew. Sandra says, if you're someone who likes guns, put it in bump stocks. Corny joke alert. If you're someone who likes guns, put it in bump stocks. I don't understand. How is that a corny joke? Oh no. I don't... sorry. Bump stock. Okay. Gotcha. Okay. Stocks. We're talking about stocks today. Very funny. I'll sell that to my friend. He loves guns. Shojas is here. Can't miss a live stream. Let's go. Appreciate you being here, man. We're talking about stocks today. My finger is a bump stock. Yes. Yeah. Although I heard they're like illegal, right? In certain places, or are they illegal now federally? Bump stocks. Okay. Back to it. So, yeah, so I invested in Elf Beauty, Redfin as my first couple of stocks, and I remember that emotion I felt when I think it was about $150 in. It might have been 120, 150, but I remember making that trade and Robinhood doing like that, confetti, like, wow, you just invested this money, and I was like, wow, this is money. This is a little bit scary because it took me a full day to make this money. You don't really think of the potential gains, you think of the potential losses when you first get started. So that was a big experience for me. And then from then on, all I really did, because I saw that money moving, was I personally, like I'm talking to you now, went on YouTube, tried to find as much information as possible on those specific stocks, and then that led me to other stocks, and that led me to other stocks, and then you try to figure out more and more. Like, wait a second, valuing a company? How are they valued? I thought a company is just worth what it's worth. I don't really know how it's valued, actually. And then you learn about market capitalization, which is like the total value of that entire company. And then you learn about like operating margin and income, and just how income is calculated in the actual price of the stock. So you learn all of these things along the way. It's almost like when you're learning a new word, right? And maybe in the past, when you couldn't look up a certain word, you would actually look in the dictionary. I remember doing this pre-internet. My dad would tell me, all right, take the dictionary and go find this word. We're talking, I don't know. I didn't know the word shrug at one point. I was like, shrug. Okay, well, what does that mean? And then my parents would do this, and I would say, what's the answer? So I took out the dictionary, and on your way to find that word shrug, you find other words in the process that allow you to gain more vocabulary. So it's almost like the same thing in the stock market. You put some money in, you start getting that emotion, and then you start learning on the way to learning more things about your particular stock. So it's pretty huge. Um, cut again. Federally legal, but the ATF is unconstitutional. So there's that. I'm with you, Shojas. Uh, Shojas, I do need to get into the stock game, as I am 44 and I never even tried to get info. Is it too late for me? All right, we'll get into it. I'll finish my spiel about starting, and then we'll get into why it's not too late. At 44, come on, you're just getting started. Wandering Doc's here. Hey, Anthony, what's going on? What's going on? Really, Doc? I'm teaching you a lot here. Okay, I know you're in the real estate game, but maybe I'll help you with the stock game a little bit. Cool. Okay, so back to it. So that's what I advise, is just get started, and then you'll get educated along the way. And then beyond that, once you actually get educated, then you want to find the companies that you care about the most. I know a lot of people are watching videos on, here are the top 7 stocks I'm watching right now, or these are the top 7 stocks that I'm going to be buying in January 2024, 2023. These videos are out there. Like, this is what I'm doing right now, which I think are good. Okay, I used to do this too, and I also invested in those companies that those creators actually put out there, like Jeremy Financial Education. But I will say it's no replacement to doing your own due diligence, of course, and it's no replacement to the emotionally attached feeling you get to a particular company, a particular stock. Like, if you're a person that is watching a video and says, "Oh, Tyson chicken nuggets, the Tyson company, it's really good right now because we're gonna have a shortage, and maybe they're gonna have an extra, I don't know, but whatever thesis is out there, like, oh, Tyson's really good. But if you don't eat Tyson chicken, you have no care in the world if this company does better or not based on the company itself. You just care if the stock goes up. So I would say, for that alone, you don't have that emotional attachment. You're sooner than likely to actually, if it starts going down, that you're just going to sell out of the position because, well, you don't care about the company in the first place. So I think that's a very important thing that a lot of people don't think about. It's not necessarily just about the companies that are going to do well in the future, but it's ones that genuinely excite you going forward as well. I have my personal experience with this. The car that I'm sitting in right now, Tesla. Many years ago, a few years ago, when I was just getting into the stock market, Tesla was a company that I heard about, but I didn't really know about it. I vividly remember being on driving lessons with students and passing Teslas, and I remember asking them, I was like, "Man, what is it, like Model 2 or Model T, like the old days? Like, what are they called?" And like, I'm not sure either. Fast forward a year later, all of a sudden, there are Teslas everywhere in where I was in New York. I saw them everywhere. I was like, what's going on here? And that led me down a path to start learning about the company. And when I started learning about the company by watching people like Solving the Money Problem and Chicken Genius Singapore on YouTube, what's going on, David? Glad you're here, man. And that led me on a path to learn about Tesla. And one of the most potent things that ever happened to me in my entire life after watching those videos was researching the company on my own and looking up the autopilot software. So this is my experience. I looked up on YouTube Tesla autopilot and then whatever video came up. And the first video that came up was Saving Lives compilation, Tesla autopilot saving lives compilation. And when I watched that video, when I tell you how affected I was, it was something magical. I don't want to be too crazy about it, but I watched this video and I saw the car bleeping and almost hitting a car and then turning out of the way on the highway and reacting to other people crashing before it ever crashed. Like a car was going too fast, the autopilot system and the cameras realized and recognized it was going too fast, blurting the alert system, showing that it's actually going to crash into the car. And then sure enough, seconds later it did, but the car preemptively slowed down. And I just saw, and also black ice, a Tesla was sliding on black ice, and I saw the Tesla autopilot system gently turn the wheel and right that car completely so it was back straight on that black ice highway. And that alone, like literally that video alone, got me to tears. As crazy as that sounds, I was like, man, I get the whole point about having analog and you control the car and stuff like that. But the fact that a computer in a car was able to save those lives that day, and we've seen a lot more from it in the future where it saved people's lives, people wearing black outfits, walking across the street, saving deer, saving your own self from hitting a deer. Uh, just seeing that autopilot system save those lives made me so emotionally invested. I was like, this is amazing. This is going to save so many lives. I mean, we have 50,000 car deaths every single year, I believe, in America. Uh, and now if you do the math, the autopilot system is one crash every 5 million miles on autopilot, whereas the standard American driving on a typical car is a crash every 1 in 500,000 miles. So it's a factor of 10x safer being in an autopilot car. All that to say, that got me emotionally invested. And that little spark, that little video that I watched led me to invest my first dollar and subsequently like 50% of all the money I ever earned in my entire life in the company back in 2020. I mean, I'm still head over heels over Tesla. It's my office, my life. From that spark. So you, as a person who maybe doesn't care about autopilot, doesn't care about self-driving cars and electric cars, I happen to be one of those people. But maybe you're someone different. Maybe you really care about, like we said, guns, or maybe you really care about beauty products, or you care about food products. Whatever it may be, you need to find your care in the world and what company that you can see yourself backing. You're like, wow, Amazon's doing cool things. They're going to be doing drones possibly in the future. All these things. Maybe you care about Virgin Galactic, where they're going to be, doing commercial space flights into the subspace, and that could be a whole market in itself in the future. Find your care in the world, so this way you have more of an attachment to it. So this way you can better stand behind your company in times of downturns. That's a huge thing. And that'll lead you through everything else that you'll ever learn with the stock market. If you love a company, you'll learn everything about it. That's just how it works. I know more about Tesla than I do about any other company in the world. It's just I don't care about anything else. So that's just how it is. All right, so we'll cut that. You teach me, yo. Damn, Anthony, you remind me of a young me, Kevin. Wandering Doc, man, he's kind of an inspiration. I'm just talking how I normally talk, but I can see this similarity as well. I appreciate that, man. That's what I hope. He was down 9 million on his Tesla position at one point, probably more now. Oh, forget it. Well, I know he's sold back in January. And like David said, he's become a flip-flopper. I know he sold back in January, and he bought back in just, I think, within 60 days. So I think he was back in March or something like that, or I forget. Yeah, so I think he bought in too early. I think he was buying in I guess the 2 to 300 range pre-split. And yeah, so I guess he's down now since we're in like the 130 range. So anybody that has bought in the last like year is down considerably, like at least the last, well, down at least 50%, like myself, more than 50%. But that's the thing. Like if I didn't care about Tesla, I probably would have sold a long time ago if I just didn't care about the company. But you care about it, and you kind of you live with it. Now, getting back on to, oh, Doc says I care about Karens. Do you really? Who cares about Karens? Um, so yeah. So getting back to that. So we've talked about how to get educated before you actually get into the market. If you're not willing to do that and you don't have the time, start and put some money in there. So this way that'll run you down the path of gaining that knowledge that you need to learn about all the companies that you care about, and then find your care in the world. Find the companies that you really enjoy and that you don't mind holding for the long term. And then that will also allow you to learn everything about that company, which also leads you to all the other fundamentals that you need to learn about the market. Now, the fourth part of that um, is when you do all of those things and you do find the company that you care about, you also have to consider the dark side, which is you might be so enamored with a company. You might be so absolutely head over heels. This is the best company in the world, but it turns out to be a nothing company, and it's not what you thought it was going to be initially, or it's just not performing the way you thought it was, and things are starting to change within the company. And this is where, as an investor, you really have to decide for yourself, is this a company that I want to stick to long term? And if not, why? Because if you don't have that why, and you don't have those reasons, and you don't have the projections on what you think this company can do in the future, your best bet is to cut ties right then and there before you watch the inevitable downfall. Um, Something that comes to mind is financial education. Jeremy, I mentioned him a couple times already. He, in this last year, and this is not despite him, he's an amazing investor, but in the last year, he's touted the company Tattooed Chef like amazingly. Like this was his company. This is his next Tesla. It will be better than any other investment he's ever had prior. It was based on some good reasons. He was getting a lot more SKUs, which is that identification number, which is new products being put into new companies. So in Target and Walmart was starting to carry a lot more iterations of Tattooed Chef. So it was showing good. It was showing some good signs that it's a high level growth company. It's growing faster than any other competitor in its space, and it was slowly growing its net income. But then what started happening? About a year ago, I remember specifically being in a class I was teaching and having a break, and there was some news out there that Tattooed Chef, they delayed their earnings call. And like, huh, that's weird. I mean, if everything's in order and everything looks good, why is it delayed? I mean, I get things happen, but usually it doesn't, and they never had that happen before. And then there was some bad news with that, and I think a couple more earnings calls later, they were talking about, I don't know, having some issues with demand. I forget the actual issues, but the point is fundamentally that company did change somewhere along the line, but he was so enamored with the company, all of his thought processes and his opinions and his all the due diligence he did on that company beforehand led him to keep holding on to that company longer than he should have. And now he's down maybe $1 million on it. So that's a good example, and he's now gone out and said like, yes, I'm glad my long term viewers have now gotten into my head and stated like, yes, maybe I did get this wrong. I was too bullish on it, and I shouldn't have been, especially in this environment, this bear market, high interest rate environment. So that 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 is a huge thing that you have to consider. So you find your care, you find your love for a company, but then also know that when your fundamentals start to change and it's not going the same way that you thought it was going to go, like demand is softening, they're cutting prices, maybe income is going down, less people are buying that product, all of these different things, or even just change of management, maybe people are stepping down for whatever reason. These are all early signs that this company is going to go kaput in the future. Not always, but usually. And they're good things to keep track of, because you never know what's going to happen in the future. Um, so that's the point. So it's get started, get educated. If you're not going to get educated, start putting a small sum of money every single week to allocate into some companies that you may or may not think is interesting. That's going to lead you on a path, when you're emotionally connected to it, to start investing more money and to start learning more about those companies. Find your care, find your why in the world, why you love this company, and then also realize if the fundamentals change, when to cut losses before things get too bad, which could have saved a lot of people money. And then I guess the fifth part, before we get into just regular Q&A, um, the fifth part I would say, well, how do you start? Okay, we talked about the good parts and the scary parts, but how do you actually get started? How much should I allocate? What should I be thinking about? Well, it's a good question. I think it also is a matter of age and your commitments at this time. Maybe not age, but your commitments, I will say, is a more important factor. Commitments are the most important thing. When I started investing, I lived at home, uh, had a stable job, making I don't know, 2,000 a month, and my total overhead for living, like buying my food, gas money, um, vacations, trips, stuff like that, a year was probably $5,000. It was probably $5,000 to sustain my lifestyle at that time. So that means 2,000 a month, 24,000 at the end of the year after tax. So I'm left with maybe 20 grand that I have just sitting, and I could now save that money. There's no other obligation. There was no babies. There was no um, house. There was no rent. I was living at home. So those are my obligations at that time. And if you're a person who is older, you might be 50 years old, but you have paid off houses, you have some kids, but you also have some income from retirement and stuff like that, and investment, whatever you have. Um, then you also have similar obligations to someone at 19 or 20 years old, like myself at that time, where I had no obligations but making some money. So I don't think it matters on age. Like to your question, Shojas, 44. I don't think it really matters. Just what are your commitments right now? Like if you're making $3,000 every single month, but your overhead is 2,800, 2,900 a month, yeah, you're gonna want to keep some money for some safety, some security in case things go wrong with the house, go wrong with the kids, stuff like that. So it's a matter of what's your commitment. What are your commitments right now? But as far as how much of your total portfolio I would recommend putting in, I think for someone just starting out, man, unless you're super educated and you're just like, here's the plan, I'm going forward with it. I'm going to put it in the S&P 500. I'm going to leave it for 50 years. If that's you, then I mean, if you have no commitments, I say 80%, just everything. Put almost everything. If you're making 2 grand a month, you better be sure you're putting like 1,500 to 1,800 a month every single month into that account. Depends on your situation. Depends on your risk tolerance as well. But if you have some commitments and you have some little disposable income, maybe for every $1,000 that you can save, I would be a little aggressive too. I would say between maybe $250 to $500, and do that every single. Well, depends on your income in the month, but every single month I would say $250 to $500. And what that's going to do is, let's say you do $500 every single month. That's $6,000 every single year, $60,000 over 10 years. So if you're starting at 19 years old, by the time you're 29, you will have invested $60,000. Whereas if the market does absolutely nothing and we have a lost decade and nothing happens for the next 10 years, you at least put aside $60,000 and it's just break even. Odds are you're not going to be down 50% over a 10-year period. It's just not how the market has trended over the last 75 years, especially when considering the S&P 500. Even in these kind of times right now, there's still some good returns year over year. So I would recommend that. I would say 500 every single month. And one thing I usually recommend too, to get you in that emotional state as well, is check out the compound interest calculator. If I could bring it up, I would, but if you do it at home, go for it. And if you guys are following along, write it in the chat when I ask you this. So get that calculator ready, the compound interest calculator. And it's going to ask you initial price. It's going to ask you an interest rate, which is the money that's compounded every single year, the money that you put in there. And then reoccurring investments, which is just monthly deposits that you put in the account, and then a time span. So try that out. Try to put $500 as your initial price. This is what your initial investment. I put 500 in the S&P 500. Let's try a conservative. Let's just say a 5% return. And typically, YouTubers and whatever finance people will say, 8% return after inflation, but let's just say inflation lasts a while and maybe we do okay. Let's just say 5%, a little bit better than a treasury account, right? So 5%, 10 years. So yeah, put it a 10-year time frame, and then reoccurring investment, $500 monthly. So we'll get to $6,000. So at the end of that, if you do that calculation right, you're going to come to a investment, all the money you put in, 60,000. And then for those of you who actually did it, let me know what that number is. 5% compounded every single year. When you hit calculated, let me know what it says. I would estimate, man, I don't know. Humans are not good at compound interest. I'd be hard pressed to find out. Um, hard pressed to find out what that actually is. I don't know, but maybe 120,000. I feel maybe it's a doubling. Is it a doubling over 10 years? I forget. Um, so hopefully someone did that. And I'll cut that real quick. David says, I do 500 in stocks and 500 in crypto. Rest go to down payment for real estate. Nice. Very nice. 500 stocks, 500 crypto. What, if you don't mind sharing, what stocks and what crypto do you invest in? Maybe we could talk about that a little bit. And then also, how much of that and the rest is going towards your down payment for your real estate? What about you, David? Like, what's your percentage of your total monthly income are you putting into the stock market? Just as a question. Is it 10%? Is it 20? Is it 50? Trevor Steven comes in hot heavy. He says, preach the good word, man. I wish someone would have blessed me with the knowledge and importance of investing in my childhood years. Yeah. Well, if I may ask, how old are you, Trevor? And let me know your experience if you are dabbling in the market right now. That'd be good to see. And for sure, I mean, time is one of the most important things. I mean, you could just, if you're still on that calculator doing that calculation, you could see when you put that out 10 years, maybe it's like a doubling. You put it out in 20 years, it could be like a quintupling. Like, it's not linear in the way that that the money doubles and triples and quintuples, quadruples. So it's pretty insane. Wandering Doc says, I'm like 85% rental properties and passive syndications, real estate equity, 12.5% cash, 2.5% stocks and index funds. Yeah, man, you're totally a real estate mogul here, which I have to learn a lot from you in real estate. But maybe we can meet in the middle a little bit with stocks. Sandra says, if you put a penny in, okay, so Sandra says this whole thing like, oh, if I gave you a penny every single day, but doubled it every single day for the next 30 days, how much money do you think you would have? Most people would probably say about, I don't know, $100,000. They just try to be like, they think of the biggest number possible. They're like, oh, 100K. Or maybe they think like, I don't know, 10,000. I've heard people say 10,000. But no, if you double a penny every single day for the next 30 days, correct me if I'm wrong, but that's $10 million. So like, we are not good at understanding compound interest. And David says 6%. I tried to swing trade Amazon. Ha! That's funny. So 6% of your total income you're putting towards stocks and stuff, I think you mentioned. So that's pretty good. That's great. And you have some good income there. Wandering Doc says, my biggest problem with stocks is lack of control, lack of insider knowledge, which we have in real estate, poor or little tax incentives, and does pay enough cash flow to achieve financial freedom. It's so true. I mean, in a lot of ways, real estate just absolutely blows stocks out of the water. But there are some ways where it doesn't. Believe it or not, this is a statistic, but this number really resonated with me. I heard it about a year ago. Again, I was watching Jeremy Financial Education and Graham Stephan, and I think it was years ago actually. I think he was talking about how much income he actually earns every single month. I think it was like 50,000 every single month, and that was through his YouTube and his sponsors and his other side businesses at that time. So it was like 50,000 a month. Big sum of money, right? $50,000 putting in hard work and YouTube videos and stuff like that. Putting that time in, dealing with clients, and a full month, 50 grand, a lot of money. But then he was like, but if you think about it, like, people always say, oh, I made all my money on YouTube. This is how I made my wealth. And he was like, but if you think about it, like, look at my portfolio day to day. There are certain days where I'm up 50 grand and I'm down 50 grand in one day. He was like, so it's like not even close. Like, the stuff that I get done in 30 days, the market can do in one day. It's just a 30x like more powerful of a money generator. So while I do believe that real estate is more stable, you have a lot more knowledge, way more tax incentive dollars, and way more stability going forward and how to actually grow your wealth. I think the stock market is like one of the most ridiculous ways to gain a lot of wealth in relatively short amount of time, with really just doing some work on the front end. Even though of course you don't have, like, this is why we mentioned the fundamentals, right? Like, if the fundamentals change, I have to get out of this. I have to get out of the company. Like, it's not going to work. But if that's why you need to know what's going on behind the scenes. And I guess you don't have all the info, but you can have a pretty good idea. Like, I have a very good idea of like Tesla's business plan going forward and why they're doing certain things. And it's because I listen to every single earnings call. Every single quarter they have earnings calls. I'm listening to the Twitter spaces, Elon talking. I'm listening to anything I possibly can to understand. Um, what's reading that chat. Trevor Steven, are you Graham's long lost uncle? Why does he look like Graham? I can't really see from here. Kind of looks like though. The same jacket, right? Same jacket. That's funny. Uh every time I looked into it, it hasn't made sense as an investment. We're looking at 30 years of dollar cost averaging until the investment makes sense, and that's simply too long. Yeah, for sure, Doc. I would say for someone like yourself or people who are really interested in real estate, it probably makes sense if you're really a savvy real estate investor. Just keep doing that. I mean, if you just know what you're doing, continually buying under market value deals, and you're getting that value over a 30-year span where you're technically dollar cost averaging into the house itself by paying down the equity every single month from maybe tenants or just yourself. So that in itself could be a huge wealth driver. But where the wild card is when you invest in companies that are high growth in the stock market. If we're talking S&P 500, it's just the cleanest way to get to that millionaire status, I guess, over a 30-year period, but can be done a lot faster with growth companies that most people are just overlooking this, saying this is not what people think it is. I mean, again, relating back to Tesla, nobody believed in Tesla 3 years ago when I was investing in it. No, nobody. And people were starting to come around, the YouTubers, right? But Wall Street hated it. Absolutely hated it. I remember every single possible thing of good news that came out about Tesla that I knew it was good news was bad news when you're talking to Jim Cramer and you're talking about CNBS, as we like to call them. Going on there and stating all of the bad things that are happening. And I remember specifically, I was in upstate New York with my now fiance, and we were watching the news in CNBS, and they were talking about Tesla and all the other automotive companies when everything was starting to. This was right after the lockdowns, in 2020, and I remember every other car company year over year sales was down. It was like red, 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 and then there was one green car company. It was like GM, Ford, Toyota, blah blah blah. It was all red, red, red because of the lockdowns. Tesla was green. It was the only one that was green, and I laugh because it's like they did not mention it at all. It was on the screen. It was like red, 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 green. But they said, every car company is doing horrible. Every single one. There's not one car company that's doing good. And then there it is because they won't. They don't want to leave it. So it was at that time where it was like still super just attacked. Like everybody hates it. It still gets attacked. Every article is bad. Um, so that's just what happens. But for the people that saw the value, they were there before the run up. Even though we kind of went back in time now that the stock has crashed so much, but but still, you had that opportunity to make all that money along that way. So it's and they call that, I believe some people call it the arbitrage moment, which is that moment in which you are noticing things that the rest of the world is not. Um, and for a fact like this is a company that will do amazing things in the future. So this was true of Tesla. I don't know any other companies at this time that it was true of. I remember looking into some companies like CRISPR, which is gene editing a company that's gonna edit your genes and maybe fix any issues that you might have, uh, for babies and for adults alike. And even Kathy Wood, they of Ark Invest, they mentioned like, oh, this is the next leg up. This is the next S curve, is getting these companies that are dealing with gene editing, dealing with health, because we haven't had a health boom in so long. Although I never really fully believed in that because I just don't think people get that. Even though it's like all of us are going to die one day, not to be horrible, but all of us are going to get sick. It's going to happen. Most people don't have that emotional connection to their health. It's just, I mean, look at rates of everything around the world. Um, so I just didn't think that was. But let's go to the comments. I'm going too crazy. I need to check out this Jeremy guy. Is he good? I like Jeremy from Financial Education. He offers a good perspective. And the videos are kind of just like this, where it's just him talking, no real editing, but it's just his knowledge from over the last 15 years in the stock market. He's grown his portfolio from like 0 to, I think total he's like around 8 million now, something like that, or 10 million, something like that. And he's been a phenomenal stock picker, loves a lot of different companies, and he's on every earnings call. He does his due diligence. It's just sometimes, like Tattooed Chef, he got it wrong, at least for now. So, Wandering Doc says Kevin, Graham, and Jeremy are very good YouTubers, so they can afford to do stupid things in stocks and real estate. Yeah, very true. Hey, what's going on, Forrest? Just saw you pop in. What's happening? Excuse me. For sure. Well, it's hard to say. Like, I understand. I know they're good YouTubers, so all the stuff they say now is kind of backed with this lens. You're viewing them through a lens of they have all this money, therefore they can make the mistakes and throw it out there. But I almost don't think about today. I don't think about me, Kevin, of today. I don't think about Graham of today. I don't think about Jeremy of today. I think about the advice they gave from 4 years ago when I was learning, and this was before they had millions of subscribers. I was subscribed to Kevin around 70K, Graham at 250, and Jeremy from like 200, like maybe 150, something like that. I was really early on, so they didn't really. I mean, they had money, but it wasn't the insane millions a month kind of money. And up until that point, they've become millionaires through their real estate and through their stock portfolio. So I kind of think of that when thinking about people who are beginners. Um, so Wandering Doc says, in my personal life, even high income earners, when they did the traditional dollar cost average into index funds and stocks advice, it took a minimum 20 to 30 years before they had enough of principal via the 4% rule. I mean, sure. Well, yes, that's true, but it's also not factoring in how much are they actually putting into. I mean, you say they're high income earners, but are they high income savers? There's a lot of people that make 100 grand but spend 90K. It's like, so obviously they're not going to have those good returns. I wonder if those people, if you talk to them, they're like, oh no, I only invested like 2% of my income every single month. So like, of course you're never going to get to that point where you can live 4%. But if you're a person that's just consistently like, okay, 50% of my income every single year and it's compounded, you'll get there a lot sooner. So it depends on you and what your income is and how diligent you are. Uh, so I'll probably answer some more questions. I'll probably wrap up because I'll wrap up that whole segment of getting started in the stock market, and then we'll go back to Q&A. Because I don't know, could I turn that into an actual main channel video if I just cut it and stuff? I don't know. Wandering Duck says, I know so many ordinary police officers and teachers who started investing in real estate, and it took all of us 8 to 10 years before the cash flow replaced the day job income many times over. And can I ask, so that's interesting. So it took 8 to 10 years for the cash flow to replace the day job income many times over, but that's not factoring in appreciation, right? If you did, would that have been a lot sooner? I'm curious. And then also, what is that number for a lot of you guys? Like, how much money do you guys need to earn right now that if I told you, here's your cash flow, here's your income every single month, here's 2 grand, I don't know, 5 grand, what's that number for you right now? And you're like, yeah, I'll be good for the next like 10 years if I just had this amount. Let me know what that amount is. I'm curious. John McKinstry, what's going on, John? Oh, sorry, hold on. Well, what's going on, John? How are you? And the Wandering Doc says, okay, screw it. I'm going to put 100K in Tesla then based off your recommendation. No, you do not. No, I didn't even go in. If you want to go into the fundamentals, then we could have a talk and I'll help you out and I'll show you what all the good things, but don't do anything off my recommendation. I mean, what does the sign say? Not financial advice, right? I don't even know if that covers me, but I say conservative things. Forrest says, I tend to watch Clear Value Tax more. He has a really strong track record. I agree with you, and I do like to watch him for actually the tax advice, Forrest. But I actually didn't like how he went after Meet Kevin during that whole stimulus check content. I didn't like, he was like, oh, like some YouTubers, they're on some drugs, some stimulants, like alluding to cocaine. I didn't really like, I wonder if the YouTube algorithm will hear me say that C word and demonetize me. That would be interesting to see. Yes, I didn't like how he went after that. It was like almost like he was jealous that Kevin was getting more views during that time, but I do like his style and I liked his information that he puts out. It seems very well researched and all that. Wandering Doc says you can't compare Jeremy to the average person trying to grow their portfolio. He has like 50 to 100K or 200K from a month from YouTube sponsors, so it doesn't matter what he does, he will get rich. Well, I'm yeah, for sure. But I mentioned before they were accessed on YouTube. Um, oh, you say none of those guys grow their stock portfolio enough to retire before they were successful on YouTube. I can't say that's true. Meet Kevin, I believe, before he had 100K subs, he already had five. I believe it was like a year after YouTube or 2 years after YouTube. He already had 5 million worth of real estate um, in equity. I believe Graham was a millionaire by 26. He didn't start his channel until he was 28 or 29. Jeremy, I believe, well, he had 200K in stocks by the time he was 25. I believe it was a million by 28. And he started his channel around that time, I think, when he was a millionaire. So I can't agree with that because he did grow well. Just obviously, me, Kevin, wouldn't have went from 5 million to 30 million without YouTube. so to your point, that initial money wouldn't have exponentially grown like that without the YouTube income coming in. I just mean right before all that. Sandra says, like if they accidentally invest in a high turnover mutual fund, at least it's tax sheltered in a Roth IRA. I think I missed something. Yeah, I think it's a really good starting point, and it is a low cost index fund, like inside of a Roth IRA, with a low cost brokerage, largely because it protects you from a lot of common mistakes. Very true. And then you also mentioned, like, if they accidentally invest in a high turnover mutual fund, at least it's tax sheltered in a Roth IRA. Sure, that makes a lot of sense. So if you're going to be starting out and you're like, there's no way I'm doing more than 500 a month, Anthony. There's nothing else I'm going to be doing. It's 500 a month. That's it. Take it or leave it. It makes sense to put it in a Roth IRA because the limit right now is it 6,500. I keep messing up. There's a $7,000. I know it was 6, but I think they raised it, right? So 5 times 12, $6,000. You could put that in the Roth IRA. So this way it's growing tax free every single year until the age of 59 and a half. You can take it out completely tax free, but again, to Doc's point, you want to use that money now as opposed to at 60 years old because you can't enjoy life as much at 60 as you're going to do at 20. It's just what people say and tell me. Um, so, but at least you have that ability to grow your portfolio stock free. So if you do have and for those of you unsure of how the Roth works, you put money into the Roth IRA, and then you invest money within the Roth IRA. It's just like a typical brokerage account. It just has some tax advantages. Any money that you put into the Roth IRA, so if I put $6,000 in a year, I could take that money out because I put that in. It's already post-tax money. But any growth, any gains that you make on that money, if you do decide to take it out before 59 and a half, you get a penalty. I forget the amount, maybe 20%, something like that. So just so you know, you have that margin of safety that the money you put in, you can take out with no recourse for the most part. John, let me get back to John McKinstry, the regal name. I love it. Is Ally a good place to start with stock investing? Interesting you say stock investing. Most people consider Ally just for a savings account. In fact, if I'm being honest, I didn't even know you can invest stocks in Ally. I wasn't aware of that. Typically, I would have said no, just because. Actually, I shouldn't say that. I would have said no just because I didn't have enough information. But I actually learned pretty recently that Ally Bank is one of the oldest banks in the world, believe it or not. And it's funny because they're an only online bank, but they actually started out as I believe, a car insurance company in the 1920s. And they actually helped a lot during the war effort in World War II, I believe. So it's actually a pretty wild story. If you ever have the chance, go look at Ally. In fact, I actually did a video, the 4 best bank accounts in 2022. I actually went through a little bit of the history of Ally because it was so interesting. Um, um, but for that alone, since they have such a long track record, I'd probably say it's fine. I would say Ally Bank's not bad. I like to be super secure. I like to look at like if I'm going to, all right, we'll say this. If I'm going to be investing my money into a brokerage account, which is someone that holds my money so I can invest stocks, I want to be certain that that company is going to be fine for the long term. I get it. We're all like SIPC insured and stuff like that, but uh, I just want to make sure that I don't have to worry about going through legal issues and sending letters and getting my money reimbursed in the form of a check if some bank went insolvent and an issue happened. God forbid. This is the reason why I transferred from Robinhood, which at that time was like a much bigger company, maybe a $50 billion company, and now it's like a $10 billion company. The reason I switched from that was in conjunction with not having that, long standing kind of history of good, um, business practices, and that a lot of people's emails were getting hacked. I decided to switch over and rethink my whole strategy with putting my money into a brokerage account. So I went with Fidelity. Um, I went with Fidelity because I realized when I looked it up, oh, it's like a 100-year-old company. There are brick and mortar stores that I could walk into if I need to. There's one 20 minutes from me right now in Greenville. And I like to look at the AUM, or the assets under management. So this way I could see what's the total money that they're managing, and also looking behind the scenes, how much money do they have on the sidelines? Like, what's their total debt? I like to look at the companies that I'm investing in. So what's the total debt of Fidelity? What's their income on their actual services? And I come to find that I think they're like managing $3 trillion, like something crazy. I don't think I'm crazy. Like not 3 trillion. Sorry, what the hell's the number? Somebody can look that up. I don't know, but it's a large sum of money, that they're actually have assets under management. It's a very large amount. So I like to look at that. I'm like, okay, at least in the event of a default, we're not going to have some sort of issue, where they can't pay out deposits, or some other issue, like maybe the FTX debacle, like not enough money, we went insolvent, we can't send the money out to people that were in crypto. Sorry, because they over leveraged. So that's what I would say. I would look at the company that you're investing in, like a Charles Schwab brokerage account, a Fidelity, probably an Ally. Just look at the behind the scenes. What's their assets under management? What's their total debt? How's their financial situation? And then if everything looks good, they're managing a lot, very little debt, good income, stuff like that. Yeah, throw it in there. And this is stuff that most people won't do, by the way. No one tells you to do this either. This is how crazy I am. I'm like, let's be ultra secure no matter what. But people see the bells and whistles of like, oh, throw it in Robinhood, or throw it in M1 Finance. Uh, I don't know, all these new brokerages, Webull and stuff like that, but they don't look at the behind the scenes. I mentioned to you guys, I actually got sponsored by a brokerage company, MooMoo, which, you could deposit like, I don't know, you could deposit 0, 100, and $1,000. They'll give you free stocks if you use my link, whatever. But I looked into the company. I was like, wow, this is a pretty powerful company. Now, this is a company that I was like, wow, this actually has a lot of different things that I would really love if I was like a trader, or if actually not even a trader, just any type of investor or trader, because I was looking through, and MooMoo actually has like income statements of the company, like say Tesla, for example. It literally had their margins, like operating margins. It had banks, like the income statements. It had, um what was that other company I was looking at? I was looking at another company, but it actually told me the amount of customer. Oh, that's right. I was looking at the MooMoo stock. I think it's like Fufu or something like that. The MooMoo stock actually gave me a detailed list of customer deposits, like how much money consume, like customers like myself putting money on the platform, which is like insane to look at. It's hard to find that information normally, but the fact that it's all in one in this brokerage account. This is not like, I guess I'm sponsored, but I'm just telling you because I just found this recently. So it has like margins, it has income statements, it has reasons why it's going up or down based on news. It has a whole community, like a Reddit kind of style, like, oh, this is why this is happening. And people talking about, hey, should I sell? Should I buy? And then some people give advice. But just such intricate stuff. Even if you're a trader and you look through technical analysis, like 200-day moving averages, or, what's the strength and support levels. I was like, man, this is crazy. It's got everything. Fidelity, I love it because it's just, I don't know, it's simple. You have the options, you have investing, and then that's it. It just looks nice, and you just leave it and you don't look at it. But as far as a stimulating looking thing, I like MooMoo, to be honest. And I have to look more into it though. Let's see. Let's go up again. Sorry, I'm missing people. Boom, boom, boom. Fair point. Savings rates is a big, Wandering Doc says, to the point where we're talking about how much are they actually saving, how much are they actually investing. Fair point. Savings rates is a big contributor. These guys were at least maxing out their 401k and Roth IRA. Still took many decades because the portfolio doesn't pay you any income. Yeah, it's true. Doc also says you need $3 million by the 4% rule to withdraw 120k per year to have a middle class retirement. The question is, how long do you think it's going to take the average person to do this? To accumulate $3 million? I mean, It's very true. I mean, that's a large a large sum of money. I like to do the math. I like to look at the compound interest calculator, even though it's not a given. Like, years like this, you're gonna have a down year, like in this environment, 2022, 2023, maybe. Um, so it's tough to say. You just have to do the math. Maybe, I mean, it depends who you are. Like, if you're making 50K a year, uh, and maybe you can save half of it, 25,000 a year. Let's say if you're crazy, saving 25K a year. Um, After 10 years, you got $250,000. But maybe if that was compounded, that could be a million over 10 years. If you have like a good 8% interest rate, something like that. So maybe you're right. Maybe it takes 20 years. Maybe it takes 15, 30 years, something like that. Really so variable. And then where do you live? Like 120K a year is a lot for where I'm at right now. I mean, I could buy a house in Anderson, South Carolina for 120K, paid off, fully paid off, property taxes, 0.5%. And live a vida loca. So I'll be having a good time. Maybe just need $4,000 a month, something like that, 50K a year, for kids and stuff like that. Sandra says they raised it to 6,500, the Roth IRA. Looking forward to the day where the limit is divisible by 12 again. I know, right? It's such easy math. That's funny. You look forward to the day where the limit is divisible by 12. 500 a month is $6,000, but 6,500, I don't know what the hell that is divided by 12. Wandering Doc says, yeah, we don't factor appreciation and principal value of the real estate. The real estate strategy is based net income into your bank account. Yeah, but it's good to know that you're so conservative with it that if the house does appreciate 5%, and you factor in the principal pay down, and you factor in the depreciation, it's like, oh, forget it. There's so much, so much value you're getting with real estate, which I'm excited to learn from you and to do it myself in this coming year, hopefully. Knock on wood. David says, don't do Ally Bank. Hit Anthony's link for MooMoo. Oh, thank you. Before I even put the whole the information out there, David, you're a real one, man. Wandering Doc says, what's cool about it is if you don't need 4 million is you don't need 4 million in real estate equity to do this because you have leverage and tax incentives. Yeah. 1.5 million in real estate will pay you 200,000 per year, I'd say is typical. The tax incentives are so favorable, so on paper it'll look like you didn't make any money. Yeah, very true. Just to give you an idea, I have $0 of my money in my rental properties right now due to cash out refinances, similar with other folks I know. David's asking how much property they got. And he says, I have enough income from active rentals in passive private placements that I don't need to work anymore. That's amazing. That's really amazing. I'm more of a passive investor now, so I stopped at a certain amount of rentals. It fits my lifestyle better. $500 in a Roth IRA is not a bad idea. Would you what would you suggest they invest in, Anthony? And Wondering Dog also says Robinhood also had that scandal where they stopped rating for 24 hours twice. Or stopped trading for 24 hours twice. Yeah, that was definitely a big thing. We could talk about that a little bit too. So more of it, blah, blah. Okay, so 500. Yeah, I think 500 every single month in a Roth IRA is not a bad idea to get started, and it's starting the motion. It's starting the flywheel, so you can get the wheels in motion. So this way you can start doing all the things we talked about at the beginning of this live stream, right? We talked about how to get started and what money to put in there. So it lets you do all of those things initially and some extra benefits, tax advantages from being in the Roth as it is. What would I suggest they invest in? I mean, I'm not your personal financial advisor, so I can't suggest anything, but definitely, for me personally, I'll say this. For me personally, I'm a lot like Doc, where I'm like, I don't want to wait till I'm 60 to have millions of dollars. Even if it is guaranteed, I don't want to wait till that long. I don't want to wait 30 years. Of course, it could be sped up by how much you're putting in there, but I don't want to. So maybe it's stubborn me, but I like to find. I mean, I want to find a company that does have high growth, the ability to have high growth in the next 5 to 10 years. Like, is this next company going to be a game changer, world changing company in the next 10 years? Like, if you're an investor in Apple, if you were an investor in 2010, your Apple was technically worth less than ExxonMobil at that time. I mean, that's crazy. So if you think about it, like, what did people see in 2010 that led them to have a few $100 billion market cap, that they didn't see that it was going to get to 3 trillion like it is today, or I guess 2 trillion now since the downturn. So having to find a company like that is definitely a hard one, and it's a once in a generation kind of thing, right? These companies are a once in a generation. Every 20 years, maybe you have it just so happened that with the age of information and the age of um, online retail, that we've had Apple and Amazon and Google just do amazing, and these companies have all, increased their valuations tenfold over the last 10 years. Um, so I would say, if you want to be conservative, yes, I would just say what everyone advises, maybe an S&P 500, a VTI, something that tracks the overall market is the safest thing you're going to do. Maybe in the worst possible scenario, like think about the worst scenario, right? We had the world locked down. We had a pandemic. We had horrible things that were happening, and the worst possible things happening at that time. Like the whole world shut down. So how is anybody getting shipped anything? Like China, everything. So no products are being shipped. It's all online. And what happened? The S&P 500 dropped about 30%, something like that, 33%, 35%. That was the worst that happened. So if you put 100K in, and the worst possible scenario, the S&P your money was worth 65,000, something like that. So not horrible. I mean, it's a big blow, but I mean, over the grand scheme of things, over the following 10 years, like if you just held it to today, I mean, you're even and you actually made some money now. You made a good amount of money. And that was just a few years later. So you have no idea what's going to happen in the future. So I would say the safest thing, S&P 500, do that for the next 10 years. Call me in 10 years, see what your portfolio did. I'm sure, I would assume that it's something good. May not be, but it's possible. Um, and so so there's that. And then I have my side of it, which is like, oh, I really love the growth companies and the opportunity to grow more. Personally, not to be a shill and keep shilling out, I just think Tesla is that once in a generational company. I mean, I don't invest in anything else. It's 100% Tesla. Because I just can't find anything else. There's nothing else that entices me. There's nothing else that has that many verticals. Of growth for the future. So that I love it. I'm not saying you should do it. I just love it. And I think if you can find a company that also is going to do those things, like maybe you think YouTube and Google is just going to keep growing exponentially like that. Like what they're doing right now is 10x less than what they're going to be doing in 10 years, which a lot of people think that. Facebook with Meta right now, there's a lot of people betting on Meta, the metaverse, and that in conjunction with the NFTs and everything associated within the metaverse. Which some people say is not intertwined, but who knows? I think it probably will be. If you think metaverse is going to be like the play, like it will be the next world, so to speak, maybe you're a person that invests in Facebook, Meta. It all depends on you. But then doing everything we talked about at the beginning, are you doing the due diligence? Did you find out this is the income? This is what's projected, and this is some of the things that people are missing. Like people are laughing at the metaverse right now, but maybe you know something that most people don't. Like Wall Street's not going into the metaverse. They're not going into the sandbox. They don't know the technology behind it. Maybe that it will be a world in 10 years where like 10% of the population is living in the metaverse and working in the metaverse, working on the metaverse. That's some good upside. That's your arbitrage moment. So you have to find that company for yourself. I probably will do a whole Tesla video, to be honest. I feel like I will. Just talking about my thoughts on it and why I think it's a good company. Again, knock on wood. But we'll see. But then you get a lot of hate. Like people attack you. Like, no, BYD and NEO's better. Wandering Doc says, how many Americans even making 80K are going to be saving 25K per year? That is not realistic in my opinion. To that point, they're going to be able to retire by the 4% rule paper asset strategy. And then David says, yeah, the average person making 80K is probably in debt spending 90K. Jeez. I hate to hear that. I hate to hear if that's a reality. And unfortunately it is. And I think, and you guys will be the first to hear this, but I'm thinking about switching up some content pretty drastically. I'm still going to do some credit card stuff, but I'm going to be introducing some other things and some personal finance tips and stuff just like that. Like, I don't want the average person who's making 80K spending 90K. You don't have to. Like, you don't have to live like that. And I'm someone who lived it. I lived this, so I can speak about this very openly. Like, I was buying everything on my own from like 16 years old, or maybe like 15, 16 years old. Like there was no support from, well, support with having a house. So if you're that person, I can't speak to that. If you were kicked out of the house, if you moved out at 16, 18 years old, I can't speak to that because I didn't have to pay rent and all that stuff. That throws a huge cog in the wheel. But if you're an 18-year-old listening right now, um, and you're watching this and you're like, well, what can I do to what can I be doing to set myself up for the future? My advice is, yeah, save 80%. Like that number is not 80-90% is not me throwing out a number. It's something I did personally. Like I saved $10,000 every single year from like the age of 17 to like 21 or something like that. It was like a 4-year period. And that was based on me being super diligent. Like realizing the value of a dollar, seeing people around me like spending money, like this is not how you should be doing things. You know, you should not be spending this much money. So I was buying the cheapest stuff. I was buying the rice in 10-pound bags, so this way I had it for a couple months and it was only like $10. I was buying the pork because I researched and I found that pork was the cheapest of all meats because unfortunately you could feed a pig anything and there's no regulation, so they pass that savings to you, unfortunately. Um, so and then being repeatable, I bought the ramen noodles and I, even though I didn't have to, I did that because I was like, how can I keep deducing the cost? How can I keep reducing the cost? Like I was spending 150 a month. I was like, this is too much. I got it down to about 90 a month, $90 a month for my lifestyle. And I was bodybuilding, I was gaining weight, all this stuff. And I lived cheaply so that I could save 90% of my income every single month. I didn't buy clothes. I wore the same shoes every single day. To this day, all I do is buy $30 hiking boots because they last like 3 years at a time or 2 years at a time. You know, these shirts I'm wearing right now, I own like 10 of them and that's it. These are my shirts for life. I don't own any other shirts really. I have one pair of pants. So that, not to be super, giving you guys everything, but I lived it. I did it. So I think people can too. And all you have to do is, I guess, sacrifice. I don't call it sacrifice. I just call it being smart and going through those times so you can speak about it in the future like I'm doing now. You can live as cheap as possible. You can make 10, I was making 20,000 a year, saving 10,000. I was saving 50% more or more and still going out occasionally, but I had no life, no life too. So that's a factor. If you have like a wife and stuff, yeah, it's a little harder. But so for the average American, no, but I want to change that. I want to change that. The average American can save 50%, and then maybe let's go into why. So that's what I'm super passionate about. And David comes in saying, I used to have some pigs. They legit eat anything. They would go, they would eat my neighbor's soap. I guess that's where we get the term, right? Oh, you're such a pig because you literally eat everything. Let me turn off. I got the seat warmers on, man. Can't be dealing with that. That is so funny. Oh no, what happened? Where's the stream? Sorry. Hide the chat. No, not hide the chat. Where's everybody's chat? Okay, we're back. David says, you can go out on the streets and interview folks, see what they invest in, what credit cards they have, and if they're paying off their balance each month. That is so funny you say that, David, because I literally just, me and my fiance brainstormed a bunch of ideas, and that was like one of the first ones. So that will be done very soon. Me and actually another YouTuber are going to be doing that pretty soon too, so be on the lookout of that. Probably next month. Oh my god. The car is crashing. Not crashing, but why am I in... I clicked an ad. No. Get out of here. No, don't give me ads on my own channel. Sorry, technical difficulties. Oh god, what'd you say, David? You said, yeah, the pigs are eating soap. It's true. Cheapest of all meat. And going out up to people on the street, like, well, I want to be like, what's in your wallet? Or, yeah, what's your credit card? Like, how much are you in credit card debt? Something like that. Or what's your favorite credit card? So very, I love that. I want to do that pretty soon. Doc says, that's actually a pretty decent idea you gave me. When I start traveling, maybe I'll interview folks to see how they live and how much money they are spending. It's actually a hot thing right now. It's starting to see the downcline a little bit. which I'm sad I didn't jump on it sooner, but seems to still do very well on YouTube, going up to people and asking them questions. You guys have seen it, like asking millionaires and whatever, how much they make every single month, something like that, with a good title and thumbnail. So I want to get to doing that very, because I like the car and talking to you guys, but I like talking to people on the street too. Um, Jason Lewis says 80,000 annual gross income. You could easily save and invest $12,000 annually, 50% gross, 15% gross every year, and still live good. It's just a matter of being purposeful, making a monthly cash flow plan. True. Wandering Doc says I'm starting in. Oh yeah, so I agree with that. Because yeah, I mean I was a person making 25K, saving 10K, so I think it's doable if you're starting out. But I guess if you have 80K, you're a little bit older, so you have a little more responsibilities. But so I would say yeah, it makes sense. Doc says I'm starting in Mexico so I can interview locals and show people how little they live on, and they're probably happier than the average American who's stressed and has a bunch of credit card debt. Very true. It's like your cost of living could be dramatically less, and people get wrapped up in their lifestyles too. Like, no, this is what I've always paid for this type of food. I've always bought 50 things from the supermarket because I need to have the little fruits. I need to have the nuts on the side. I don't know, just random foods that people buy. Like that's a huge contributor. Um, so um, sorry, I'm reading. Yeah, so you can live on a lot less and be super happy. But all these things in life and society is thrown at you, like you need to buy a car, you need to, you know, have nice, have nice clothes. Like this is $7 a shirt. It's a nice shirt. Yeah, yeah. So you could be saving money. Maybe I'll make a whole nother video on that. That'd be cool. Uh, Jason, yep. The question is how should they invest that money? I would recommend income producing real estate. Yeah, I mean, Doc, you come from the real estate world, so you know for you it's a no brainer because you're like I'm in it. Like I know real estate in and out. I could find these wedge deals, and I could get if I invest 12K a year in real estate, I know I'm getting back that money at least every single year in income, on top of the appreciation and everything. Maybe somebody really likes uh maybe somebody really likes stocks and I don't know, it depends. How should they invest it? I don't know. I think you could probably invest 500 a month in stocks alongside real estate as well. Why not? I mean, if you save $10,000, that'll be maybe just say $250. Be very super conservative. So that's what, 3 grand, right? So that's $3,000 in stocks at the end of each year, and then maybe the extra, uh, eight. What is it? If we're saving 10,000, yeah, the other $7,000. Put that as a down payment towards a house every single year. Maybe something like that. It's a 150K house, or it's a 100K house. You're putting down 5% and then factoring in taxes and all that stuff and whatnot and agent costs, so maybe 7 grand, and you can buy an investment property every single year. At the end of each year, rent it out, rinse and repeat. Maybe refinance it if you make some money on the deal, put that into the next property, another 7K. Not a bad idea. Definitely not a bad idea. Ramen noodle tastes good for sure. They do. Ramen noodles is very good, but the sodium makes you crazy. I used to have 4 a day because I was like, this is the cheapest calories ever. This is like 1,000, 1,100 calories, and it's like $1. So, but my brain doesn't work as well on that much sodium. So I found that the max is 2 you can eat in a sitting, and the brain doesn't get affected as much, but still like 2,000 milligrams of sodium. Doc says, Anthony, I'm trying to reduce my entire house down to like a backpack and one suitcase. Need to get rid of 90% of my clothes. Any tips? That's a good question. So, speaking to in my experience, so when we travel, okay, so technically me right now, basically everything that I own or will take with me can fit inside of like a carry-on. I have a bag that a carry-on. And then maybe if I care about like little trinkets and stuff like this, well, this is in the car, so I don't need to worry about it. But little trinkets and stuff like that, I probably could fit in like a duffel bag. Not a duffel bag, like those straw ones, the string ones, whatever. Um, so you can definitely do it. I mean, I would just recommend like I know whoever your lifestyle is, maybe like me personally, I bring one pair of dress pants, one pair of these jeans, and then I bring 10 of these shirts, 2 hoodies, one big jacket, and two gym outfits, so like shorts and a tee and all that stuff. So like that's everything. So that's maybe what 15 articles of clothing, maybe 20 articles of clothing, but I could fit that all in one carry-on bag that I have, and I stuff it a little bit. And then if you're just well, you're gonna be backpacking too. Like I have the advantage of the car, because I throw stuff in the car. So I would probably say if you're gonna be doing that, yeah, probably the carry-on and probably a backpack with all the stuff that you want to take with you, but all the other stuff you just leave at home. All you really need, I would say, about if you can condense it to 20 articles of clothing, and then use the backpack for like water bottles and stuff like that. Stuff you can put extra stuff that you find on your travels. That's probably what I would recommend. The clothing doesn't really matter. I mean, you could wear the same shirt every day. Who cares? You know, I've done that. Who cares? And I kind of do that too now. Um, so I wouldn't even be opposed to even like 3 shirts. Who cares? Just keep cycling it out. You know, whatever. Um, so maybe 20 articles of clothing, 25 counting underwear, socks, and stuff like that. You could fit that all in there. I think you'll be all right. Yes, Sancho, you caught me before I said it. So if you're going backpacking, yeah, I would probably do that. That's what I would do. I would fit everything in that duffel bag and then maybe a backpack for stuff I find on the way. Hopefully that helps. I don't know. Uh, you know, and I don't know if you mean get rid of 90% of your clothes, like you're literally trying to get rid of them, like throw them out, then just take them to a shelter, but or donation clinic. But if not, then yeah, just find your best 7 to 10 shirts, best 1 pair of pants, 2 pair of pants max, you know, and then you're living good. You don't need anything else. David says making 80K in that rice and beans budget save lots. Oh yeah, oh yeah. Even beans are a little expensive though. Not to be crazy, but I just figured like, why am I gonna buy beans? I'm gonna have to throw out the can, buy the can. I'm gonna have to cook it. It takes too long. I was like, let me just buy more rice. So I'll have more rice and more chicken or more pork and stuff like that, and then I'm good. Uh, Wandering Doc, is that a Donald Trump with sunglasses bobblehead? No, this is actually my Wall Street Bets stock bobblehead. If you guys know Wall Street Bets, this is somebody 3D printed this, I believe. My fiance bought it for me. So I figure we're going to be talking about the stock market at the beginning of this live stream, so let's put it here. So we got it. True, Doc. Investing in anything you like and understand. I still remember Sue Zorman saying, "Invest in the known before the unknown." Yeah, which was my advice in the beginning. It's better to invest nothing than to invest in anything you don't understand. Yeah, very true. If you don't understand it, any slight issue with whatever you're investing in, you're gonna be scared to hell, and you're just gonna run. You're gonna sell it or just leave it, by the wayside. For sure. Um, I've seen those videos. The guy walks up to Bugatti and asks them what they do for a living. Yeah, like Daniel Mack does that. There's a few people, but it's definitely one of those things that does well on YouTube for sure. Just going up to people, what's your debt? What's your net worth for a $2 bill? What's your net worth? Something like that. Wonder Doc, it's either an Iranian sheik or an OnlyFans girl. I'm not sure what we're referring to. I think I missed something. David, you can put 5% down on conventional loans. Yeah, yes, you can. You could, in fact, some lenders with conventional, they'll allow you to put down 5%. I mean, down as low as 3%. You just got to find those lenders, and you have to qualify. Um, but yeah, you can get down as low. I know, David, and this is something that was amazing to me when I first learned about it. I was like, oh, okay. So, and then everybody I talked to lenders, I talked to them, and they're like, no, you're gonna have to put down, 20-25%. They're just trying to, work you a little bit, which, it wasn't always a thing like that in the past. Like, speak to your parents. I spoke to my parents. They're like, there was a time where I put like $2,000 down on a $300,000 house and they won it. But at that time there was less regulation. But nowadays, yes, conventional lenders, people who lend on conventional loans, will allow you to put down as low as 3%, as long as you qualify the income, all that stuff, and you'll be good. But a lot of people will go with like the 5% option. That tends to be like the next leg up where more and more people are getting accepted at the 5% range. But yeah, $200,000 house, you can get in the door for 10 grand. You pay a little bit of PMI, some mortgage insurance, and you're good to go. You're in that property. But then income and all that stuff. Jason Lewis says the investing category almost doesn't matter. Then first putting aside this money consistently first. It's controlling your income habit that kills debt and produces wealth, in my opinion. Yeah, I mean, there's two schools of thought, right? It's like, can I save my way to the millions or can I invest my way to the millions? Now, I guess it's the wrong question because I mean, saving your way to the millions, it's gonna happen, but it's your whole life. Forget it. That's way too long of a time period. Investing your way to the millions, yeah, that's how you'll get to the million. Investing in real estate, stocks, all that stuff. Um, but the fundamental thing, the most important thing is, are you a saver? Like, can you save the money? Because if you can't save the money, you can't invest the money. So it doesn't even matter. So yeah, if you have that strategy first, if you have the fundamentals down, this is me. I'm Anthony. I'm Jason. I'm Wandering Duck. This is how much I want to save every single month, regardless. I don't care what's happening. I don't care if people say, let me go out. Let's go out. Let's go out to the movies. Let's go out to the bar. I don't care. I can't. No, I'm not going to get drunk tonight. Sorry. I'm not watching this movie tonight. Sometimes it's got to be like that. I get it. We want to prioritize the happiness and the experiences as well. So you have to allocate money for that. But you also want to be diligent enough that you're not just spending 100% of your income, because I had friends like that. And every single month they got paid. It's just, oh, here's look what I bought. It's interesting, fine, and you live, and they're still around today, obviously, and they have money, but you can set yourself on such a good trajectory just doing your due diligence now, getting the fundamentals down now for you and your specific personal finance situation, so this way you can save the most amount of money in a shorter amount of time. But it also just builds character, like saying no to things and saying, despite everything else, despite what everyone tells me, I'm going to save this amount because that's what I want to do. And this is the goal that I want to hit for the future. So I'm going to hit it regardless. And if you live that way, like buying no clothing and buying very cheap foods and stuff like that, you build your character along the way. I mean, I'm a firm believer in earning your stripes and like everything, like, so you got to do it. Um, if not just a year, just to experience it. Um, Wandering Doc says, yeah, I'm finishing my military time, but most of my house is a bunch of old furniture and clothes, so I want to get rid of everything and just leave one box at my parents' house for now. Are you going to sell the house too? Are you looking to sell the actual house or just keep it one box there? But that's interesting. I mean, I would recommend, if you're talking actually getting rid of everything, man, believe it or not, Facebook Marketplace is pretty good for that. I mean, I have a friend that everything that is like slightly inconveniencing them in the house, like they don't even want it, I'll put it on Facebook Marketplace, and then within like a day, he has someone buying it. Like they sold a fish tank, a bunk bed, or whatever, and it was like $100. And like, here you go, boom, they sold all those things. So I actually recommend, if you are trying to get rid of everything, try Facebook Marketplace. There's also another app called OfferUp, but I find that there's a lot more scammers on there. But that's something. OfferUp. You can put your stuff on there almost like an eBay. People could buy it, and then you could deliver it. But at least Facebook Marketplace is local, so you can drive it to them or they can drive to you. So I recommend that for sure. Get the most out of your money. Don't just throw it out. Make a little extra. Wandering Dog. I mean, MR. Oh, how's it going, MR? Nice to see you here. Jason Lewis says, exactly. I mean, he responds to Jason Lewis saying, exactly. Training yourself to have the proper mindset, put money away, strong emergency funds, simplified investments at first, IRA, ETF, CD ladder, then reallocate to real estate. Yeah, I mean, it depends. Some people just have backgrounds and things. Like maybe your family grew up in real estate and very well. You could start with that. Whatever you know first, like Jason said. David said, so you guys do budget or just spending on whatever? After I just went through that whole thing, like, be super diligent. It's like, you guys just spend whatever, or like, what do you, whatever. What do you spend your money on every single day? That's funny. It's true. Yeah. Do you budget or do you spend? See, okay, personally, I'll say this. I actually never put together a budget, if I'm being honest. Like, I never thought about budgeting, like, oh, I want to save 90% of my income. Like, I thought that, but I never put it in writing, like actual going through the numbers. But what I did do the numbers on was, how can I reduce the cost of everything that I'm doing right now? And then that led me to getting rid of all the other excess stuff along the way, like subscriptions you get rid of. But mostly it was the food, because that was like my income. It was either gas, but I needed that for work, or it was food, which was, the most money draining. So I just I got rid of all the stuff the excess food that I didn't need. I was like, this is not even giving me enough calories to worry about. Um, so let me just cut those costs immediately, because I knew my first thought was save first, spend later. That was always my first thought: save first, spend later. So I never even had a concept that, oh, here's my budget for spending on things, because I didn't spend on anything. I didn't go out. I didn't do anything. So it never had that thought. Um, so so my fundamental truth and my thought process from the age of 16 to now was always been, okay, every 100% is being saved, and then, okay, for the things I am spending on, how can I reduce that? Food, and even to this day, I'm really just spending money on electric and food, and now I have gym memberships and stuff like that, so it's a few $100s a month. So that's the thing. So that's the thing. It's like, that was just my mentality, though. So I agree most people should budget, but I was just so obsessed with the idea that it was all in my head anyway, that to save first, to budget later, or spend later. Um, Jason Lewis, exactly. Pick an amount that you're going to save as a set line item each month, then invest it. Yeah, for sure. If I save 500 a month, okay, 400 goes to investing, 100 goes to me. I can spend that on whatever I want. Sure, I like that. Wondering Doc says, "No man, I'm renting a luxury one bedroom in Bethesda for 4,000 a month. I need to leave this place ASAP." Oh, that's right, right. Yes, you're renting at the moment. That's right. Yeah, man, 4,000 a month. Go find an Airbnb that's like 1,000 a month and like fully furnished. Like, there you go. What are you gonna do for backpacking though in Mexico? Are you gonna stay? Where are you gonna live? Are you gonna stay in just hotels or Airbnbs and stuff like that, or how are you gonna do that? Overpriced area. Hey, Edris. My man is here. Anthony Legend, W Stream as always. I'm glad you're here, man. On this beautiful Saturday morning. It's 60 degrees. Sunny skies, not bad. Over here, brought to you by South Carolina. Wandering Doc, I have unused Kenzo and Versace t-shirts, Gucci shoes that are unused, LF scarf and belts, all the gifts from exes. Yo, all right, look, you're on the Discord. If you have those things, dude, I'll buy them off you. I mean, if you're just gonna throw it away, I'll give you some. I'm not gonna pay like top dollar, but I'll take that off your hands. If you don't just throw it away, I'll take it. I'm just kidding. If you're gonna donate it first. That's the most important thing. But if you're thinking like, oh, throw it in the trash, just think about Anthony first, because I'll take the worn stuff. I'll take all the hand me downs, please. That's funny. I also have a surfboard and skis and a TV. All needs to go. The furniture is like 12 years old from IKEA. I doubt I could even get 20 a piece for it. Huh. Interesting. I mean, if you could donate it all, that'd be good. I think the TV and all that, throw that on Facebook Marketplace. You got a few $100s for the skis and the ski poles and the surfboard. It just says, beautiful Saturday, but not as beautiful as you, my man. Okay, Doc, you beat me to it. All right, you said ramen noodle diet and buys a Tesla. Got it. Useful stream, Anthony. I get it. I'm a hypocrite. Okay, I get it. I'm a hypocrite. It's funny because I meant to say that. I was like, I say all this, but I bought a Tesla. you know, but that's so funny you say that. What was I gonna say? Oh yeah, I was gonna go back to that because I was gonna call myself a hypocrite. So I'm glad you did. And my reasoning was, okay, here's the deal. When I went to go buy the Tesla, this was my first purchase for like anything in my entire life. Like this was the only purchase I ever made on anything lavish. There was no real vacations, there was no anything. So I was like, okay, I'm already an investor, because I got this a year ago. I was like, I'm already an investor in the company. I rented the car. I love the car. He says, okay, so as an investor, and to fully know the product, and I hit the bottom of the market, it was like 37.5. And I did my due diligence on the car, like, oh no, this car will actually probably raise in price over time, which it did. I found that I was like, I'm gonna do it. I'm just gonna do it. I want this car. I think about it every single day. I'm gonna go for it. And then once I get into real estate, I can write it off. So I'm gonna be doing that soon. So it was deliberate. It was not just a lavish purchase, even though it was a lavish purchase. Um, now I'm backtracking, but for the longest time, up until recently, since Tesla cut their prices 10 to 20%, this car that I bought for 37.5 was worth like around 50K, like for the majority of the time I owned it, and now it's like getting closer to what I paid for it. So it's like, even maybe a little less. So I was thinking like, okay, it's the safest car in the world. I'm getting a low price for it, and it's maintaining its value. So I could sell it right now and pretty much get back my initial investment. So I really didn't pay any money for it. I mean, I'm gonna keep it, so obviously it's gonna be it's something that I did pay for. It's that 20 grand out of pocket, right? Um, but or whatever it was. Um, but at least I had the opportunity to sell it in the future. But just wait, if we do have robo taxis, this car will be rented out as a robo taxi, and I will be making money. So maybe it's an investment. It's maybe an investment. The Tesla might be an investment for the future, so we'll see. Um, yeah, we'll have to see. We'll have to see on that. But I could always rent it out. I mean, people are spending $120 out here to rent it per day, so I could just rent it out, for a year if I wanted to. That'd be cool. But definitely, this was my lavish purchase. I did not need this car at all. But do I regret it? Nah, really not at all. Because I find that in real estate, as I'm driving this car around, especially in Greenville, I have I've gotten more like looks and like conversation starters. Like people come up to me, they might hear my accent and they're like, "Oh, you're not from around here." But most of the time it's like, "Oh, it's a nice car. How long is the battery last? Is it, do you have to charge it a lot?" It's a great conversation starter, and people are always interested in Tesla. So it's good to be like the Tesla pioneer here, doing real estate. It's interesting, but long-winded excuse. Thanks, Doc. Appreciate you being here. Uh, Uh, to be determined. Planning on 1 month in each city and 2 to 3 months in each country. Very interesting. Plan is either Airbnbs or negotiate a cash rate with a local landlord. Yeah, I've seen a lot of people do that. I've seen people stay at um definitely definitely I've seen that before where they stayed as an Airbnb guest for a while, and then they actually negotiated, a cash rate with the local landlord, and they're always pretty happy to do that. Um, Especially if you find the right city that has laws on how often they can actually rent out their Airbnbs, like maybe it's only like 10 to 15 days out of the month, they'll appreciate you paying for the full month, staying there. So they'll give you a little bit of a cut on that for sure. Jason Lewis says, not a hypocrite. Controlling your income is for two definite purposes: produce wealth and buying things that bring you joy. So bravo to you, Anthony, and maybe you'll drive me around in it. I know a lot of people want to be driven around the Tesla nowadays, especially with the self-driving and all that. But I appreciate it. Not calling me a hypocrite, but yeah, I mean that's what I figured. I was like, I never spent anything my whole life. I'm 24. I mean, let me try to buy it. Like a year and a half ago, whenever I bought it. Was I 23? No, I was actually 23. It was right before my birthday. So I was like, oh, let's just buy it. Fine, let's buy it. Let's see what happens. But it's good because it did increase my conviction in Tesla, driving the car actually, because now I could speak with conviction. I've owned the car, I know it. So I know the company by extension. What's the build quality like? What's the reliability? What's the safety? And I can't wait till the beta comes out where I'll probably start doing videos like that as well, where like the car just drives me around and maybe I'll just do a video as it's I think that would be really unique. But we'll see. David says, I'm gonna run my Kia to the ground. After that, I'm getting a Tesla. I'm not opposed to it. Not opposed to it. I mean, if you're trying to save the most amount of money, because David, you have goals for real estate, I may advise against you getting a Tesla. Unless you're like, dude, I don't care, I'm writing it off, and that's it, then fine. But if you have that goal of like, this many houses by this age, I probably would recommend not doing it. Like put it this way, if I found a really good deal like in real estate right now and I had no money, but I had the car, I'd sell the car and buy the house. Like no question, I will do that in an instant. So I have that margin of security to know that I am okay to sell this and go beyond. Um, but for sure, it's not a bad idea to just run your car to the ground, just keep going. Like my first car, I told you guys, was a 2000 Mustang. I paid $5,000 for it. Never spent another dime on it for the next 8 years that I owned it, and then now I just sold it recently for $1,000. So 4,000 over 8 years is not bad. What's the math on that? Like I don't even know. Is that 500 a year or something like that? Yeah, $500 a year that I spent on that car. Very very minimal, to be honest. And same with the Kia. If you buy Priuses, it's good. But yeah, but the Tesla has other things. Like I love the autopilot. I love the safety. I love the reliability. I love the charging, saving money. So there's a lot of other factors like paying for gas and all that, but still, I if I'm saving money, I'm buying a Prius for $5,000 and keeping that for 20 years. I'm not buying a Tesla. That's just how it is. Um, yeah, for sure. I think I forgot to wrap up that whole stock market thing. I wanted to finish that. Not even sure. How should I even wrap that up? I don't know. Do I even have to? I don't think I didn't even think I need to. Because if anything, I could film my own thing afterwards. All right. Jason Lewis says here. Yes, here's what all of us should know, and it's the same advice I heard on TV. You can have it all, just not all at the same time. Yeah, very true. And that actually that reminds me of Kevin O'Leary. You guys know Kevin O'Leary as Mr. Wonderful on Shark Tank, and he had very intelligent parents, Lebanese parents, and his mom would tell him. He told little Kevin. He told little Kevin, she was like, I don't buy a lot of things, but the things I do buy are very high quality because they're going to last me a long time and they're worth it. So I've kind of thought that over the years. I'm like, yeah, that makes a ton of sense. Like over the years, I have bought like cheap things, like cheap phones or maybe, I don't know, random cheap things that you want but you don't need, and then you kind of compromise because you're like, I want to save this money, but I also want this thing. So you end up with in fact, I take this from Alex Hormozy. He calls it no half measures. He says when you compromise on the thing that you want versus like maybe the saving the money, you end up with like a mediocre thing. Like he was talking about investments and something, but he's like a mediocre investment or a mediocre item, and you end up in the middle where you have mediocre both of them, right? Where it's like if you want the thing, if you want the Tesla, just go all in, buy the Tesla, buy the one that you want, um and make that last your whole life. Or if you're trying to make an investment, then make a really good investment. Don't try to like buy a house and buy a Tesla at the same time. Just make a really good investment on either side, and you'll be better off. So no half measures. So same with that logic with Kevin O'Leary's mom. Buy things that are really high quality. They're gonna last a long time. Like I didn't want to buy this phone that I'm recording on right now, the iPhone 13 Pro Max. I didn't want to buy it because it's $1,100. I said, this is such a waste of money. I have an iPhone 8 Plus that I've had for 5+ years. I don't need another phone. Lo and behold, I got the phone, started the YouTube channel. So it's like I got the high quality thing, and I will say it's way more efficient and it looks nicer, and everything is better in every way. So that was a very good thing that I ended up doing. Same with the car. It was a lot of money, but I wanted it, and it did improve my life dramatically over the time that I've had it. So buy the things that are quality. Get rid of all the million things that you want to buy, the half measured stuff. It's kind of a waste, and you'll have to replace it anyway. Unless the item is cheap and it is good quality. Like I have these Kenevo headphones and they last like 3 years and they're $20. So that could work too. Uh, yeah, Jason Lewis says life's about making decisions and trades. So be self-aware enough to decide what you really want in your life, then let that control your money. Yeah, Jason, I said this before. You have a very good mindset for money and just life in general. And same with Doc and David. Very good ideas and very healthy mindsets regarding money. It's good. It's something that a lot of people don't have, for sure. David says you could do vids on selling houses as an agent. Yeah, I definitely could. I just I want to be able to speak with conviction on the videos. So right now that's credit cards and stocks, and in-person stuff and like personal finance saving. Like I can speak with conviction because I've done it. Real estate, I haven't done it long enough to speak with conviction yet. I don't have all the answers, so I could do videos on like getting started. Yeah, like getting started and what I've been doing so far. That's fine. Maybe I'll do that. Um, but you know, as far as like the really intricate stuff, I'll probably have to wait a little bit. Although the lowballing people on the phone, I'll be doing that soon because that's like you can just do that. That's funny. It's entertaining. Um, Nice. I love man. Doc says I bought my 1997 Honda Civic manual for $4,400. Drove it for 7 years at 100K miles. Sold it for 2,600 in one day. I mean, your out-of-pocket cost was $1,800 over 7 years. That's insane. That's insane. That's $250 a year. Like I love that. Like you want to buy something that's gonna retain its value. So right now it's like buy a 2005 Prius. You know, or buy a 2005 Camry, 2005 Toyota Camry. You buy it for 3 grand, you'll sell it in 10 years for 2 grand. Like something like, maybe not 10 years, but something like that. Maybe a 2010 Camry. So you can find some good cars that you'll get some good resale value for the future. MR coming in hot says, I use Kevin's Beanstocks app. It's an intentional it's an intentionally simply app for savings investing. That's also very easy to rebalance, mitigate risk. Yeah, I'm aware, but I'm not super aware with Beanstocks. What's the deal with Beanstocks? Is it like an Acorns investing where it's like, oh, we'll top it off for you and we'll throw the extra, cents on all your purchases. We'll put it in there, invest it on your behalf. Or is it different? Because that's interesting. I'm not aware. Jace Lewis says, I didn't know that about Kevin O'Leary. That's perfect. Um, that's what I do. I buy quality, not quantity. That will last a long time, saving money from buying cheap items that I need to replace. And then Lewis says, yeah, cheap glasses last forever. So true. I still have $7 pair from 2005. There it is. There it is. Very true. And I have glasses. Yeah, I have sunglasses that I wore. It's just occasionally, not very often. But I found them because an old student of mine just left them in the car. So that was $0. Even a water bottle that I used for a while was a student's. I cleaned it, but that was free as well. So you can find a lot of free stuff too. And on Facebook Marketplace, you can get furniture for free. People just want to get rid of their furniture on Facebook Marketplace. So if you're gonna furnish a house or like a rental property, go to Facebook Marketplace. Everything's for free. Throw it in there. Make it look nice. Save you a lot of money. Doc said, it's funny that you mentioned that. I only drove once per month, but I'm using my dad's 2009 Prius at the moment. Yeah, man. Prius is cheap, reliable, long range, all that. Wonder Doc, I sold a cheap car I had in Korea. Then when I got back to the US, I realized it doesn't make sense to drive most places here, so I never bought a car. Oh, wow. Interesting. Very, very interesting. Yeah, man. So it seems like we're all on the same page. Like a lot of you guys, is there any like lavish expenses that you guys spend money on? Like is there something that you're just uh I don't know. Maybe maybe if it's like a monthly thing, like maybe you pay for a massage therapist every single month or something like that. Or maybe you have a gym membership that's like 150 a month or something like that. And you guys have that it's like, yeah, maybe I don't need it, but it's good for life. And I want to spend it even though it's a little bit of money every single month or like supplements. David says, do you use your Tesla for driving school? No. No. And it's funny you say that because at one point I tried, not tried to do it, but I tried to talk to my boss and I was like, is there any way you could put me on as a 1099 and this way I could use the Tesla and then I could write it off as an independent contractor? They were like, I don't really think we could do that. We got to give you, you're a W-2, which I really should have been a 1099 because I got paid by the service, not by the hour. So if I had a student that day, that was $20 per lesson. I didn't get paid for how many hours I worked. So that's funny you say that. So I should have been, but no, I didn't use it. So the thing is, I couldn't use a Tesla as a driving school car because I don't have the dual brake. Driving school cars, you need to have the second brake on the side. It's just you can't do it otherwise. I will not trust anybody to drive a car without that dual brake. Anybody, knowing what I know and people I've met, forget it. I don't trust anybody. I don't know how parents do it with their kids because I drove with their kids and like if I didn't have that brake, I wouldn't be here right now. I'd be unalive. So it's funny you say that. Sandra says I have a Corolla that I got in 18, but I'd like a hybrid or electric for my next. For sure. I mean, hey, look, even if you wait some time, like the Corolla is now 5 years old. I mean, I've driven Corollas because that's what we used for driving school cars and Camrys. I mean, you're good until at least 300,000 miles, honestly, like 250, 300,000 miles, as long as you're not hitting every pothole in the state. We had a lot of them in New York. You're gonna be good. So I would even like set your calendar. Like if you want to be crazy, set your calendar for 2028 and be like, can I make this car last till 2028, and then cash in 5 years. It's not a crazy amount of time, and then get the next car. Go electric or something. Buy a Cybertruck if it's out then. Um, Doc says, and then you did mention I won't get mine until it can't drive me anymore. Very true. Yes, exactly right. In Hawaii, I spent about $3,000 per month on food. I spent about $3,000 per month on food. That's crazy. In Hawaii, $3,000 a month. Woo, whoo. They doubled my salary, and I was doing the Yelp 365 on going on a lot of dates. Yeah, okay, gotcha. So wait, what's the math then? Okay, let's do the math for Doc. If you're in Hawaii and you're taking people out on dates, how many dates would it take to get the $3,000? You figure if they're very nice restaurants, you and her appetizer, dessert, fine, $100. Let's just say it's $100 for you two, and you're really showing them a good time. So that would mean 30 dates, right? If it's $100, if you're spending $3K a month on food, but let's say some of it's for you. So say it's just half of that. So you had to go on 15 dates. So you going on a date in Hawaii every other day? Hey man, it's pretty wild. Doc's going crazy. That's a lot of dates, man, to not be like you need to listen, you need an ROI on your significant other too. I'm sorry, if you're not getting a return on investment for all the money you're investing into your significant other, man or woman, I mean, you're doing something wrong, okay? My fiance has given me infinitely more value than the money I've given her. I'm just kidding. We split a lot of things too, you know. So we split the food, we split a lot of things. She's amazing, best person I know. But I guess for you other guys, I mean, I would say you need an ROI, man. You might need some ROI. John McKinstry. John McKinstry. I think my next vehicle is going to be either Honda or Toyota because they're extremely reliable and hold their value. I'm such a proponent of Toyota, it's not even funny. Every student I've ever had over the years, which was like maybe 2,000 to 3,000 students over the years, all ask me my opinion of what car they should get when they get licensed. Always, always, always Toyota Prius, Toyota Corolla, Toyota Camry. Those are the three cars. That's it. Don't go Dodge. Don't go Chrysler, which is made by Dodge. Screw Nissan, not screw Nissan, but I don't care for Nissan. Any of these other companies, I only heard bad things. Toyota always treated me right, treats everybody right. I mean, there's a reason they sell 10 million cars a year. And the Camry's like the best-selling car. You know, one of the best-selling cars. I recommend that for like life. You know, use that forever. Let's see, lavish. Jason Lewis says, my indulgence is taking Disney vacations. When I go, I choose to stay in one-bedroom suite and eating at Disney Resort restaurants, but that's really it. Yeah, man, the Disney Resort restaurants can be very expensive. We were there, I forgot what we ate in some Italian restaurant. I can't remember what it was. And I wanted to go to that one that's like inside of a volcano. And they have some interesting ones there, but Disney Resort is a bit expensive for sure. I like going to Epcot. Epcot and Disney is a lot of fun because you drink around the world, right? You go to drink in Japan and in China and Amsterdam and Norway, I think Norway, Mexico. You drink in all these places, and then by the end of the round, 13 countries, you can't even make it out of the place. So then you hang out, you eat some eat some food, and then you have a good time. I gotta go back to Epcot pretty soon. Wonder Duck says, I spend $203 a month on Equinox now. I gave in because it's only a 1-minute walk from my house. I wonder, Doc, is there a way? I know because the Equinox, we get a credit on our Amex Platinum cards. I forget what it is. Was it 25 a month towards Equinox or 15 a month? Is it possible to have 2 Platinum cards and somehow get both benefits on the Equinox credit? Or no? I wonder if there's like a way to split it up to get both credits. It'd be interesting. Jason Lewis. Everything else, no, I'm a simple dude. Unless you count my gym membership as an indulgence, but I don't. Yeah, same. I mean, I pay like $30 a month. $30 a month. I don't really. It's like you need it. Yeah. Oh, it's like you need to have the gym membership. I pay $140 every month towards jiu-jitsu membership. So that's my lavish thing. Emor says Doc is either really good at dating or really bad at dating. I'm not sure. LOL. Yeah, I guess, right. And Doc responds, in my 20s, I was very reckless. Then in my 30s, I realized you don't need to spend money to take people out on dates. Yeah, absolutely. The best date is a museum. Because, like, depending on who you are, too, but I liked going to the museums and reading everything and, like, kind of learning about what's going on and just history and all that stuff. So you take a girl on a date there, or a guy, and they just not interested, then you kind of just know, like, okay, they're just not a curious person, uh, and they're just not super interested in just things in general. Like if you could be interested in a museum, you'll probably be interested in a lot of different things. And my fiance alike, you know, when we're at museums or doing tours and stuff, we're like super intent. We're like, wow, look at all this. This is crazy. This is so interesting. You know, so I think find someone who's interested in museums, because a curious mind is an interested mind, and an interested mind becomes more interesting over time because they learn a lot of different things. So I think a museum is the best first date, for sure, for that reason. But maybe you don't care and you just want someone that, who cares, you know, let's just hang out and play, you know, something. I don't know. Just go for a nice walk or coffee, or invite her over to cook a meal, something, or for wine. Yeah, wine could be cheap, man. $5 for a nice thing of barefoot wine. Oh yeah. Mm-hmm. You can go on some nice walks. Very good dates for sure. Go out to coffee. MR, exactly. I was a reckless youth who often threw caution to the wind with the ladies. Jesus. We're going to have to start a relationship channel. Maybe I could make the. Why couldn't I make those videos? Tell me, why couldn't I? Even though it's finance, maybe I could work it in. Why couldn't I give advice on that? I think I could give it. I don't know. Maybe I can't. Maybe I'm a one-track mind, but who knows? David says, "Don't get a Kia. Such a terrible car. Burns so much oil or gas, right?" Yeah, the Kia. I don't know. I haven't heard so many amazing things, but uh, I haven't heard so many bad things. But I also haven't heard like amazing things like I've heard with the Toyotas over the years. But I can't really have an opinion on that. John, John, to my point. Um, oh, what's going on, Anthony Jones? I see you in here. Uh, I see you in here, man. Nice to have you here. I think you were in the last one, right? But John McKinstry coming in hot. He says, I had a Dodge one time. It was one of the worst cars I ever owned. That's what I'm saying. Case in point. There's no reason to buy a Dodge. I'm sorry. Okay, aside from the flagship Charger Challenger, I think those are well made because that's their flagship. But any other car I've ever seen in my entire life, Dodges, and I've been around a lot of them, and Chryslers, they are the they just don't last. They absolutely do not last. I will say Ford, actually, believe it or not, I've had good experiences over the years. I think they can be super beneficial. Um, I think they can be super beneficial for the long term. But again, if I'm deciding, it's Toyota. Uh, Wandering Dock. Well, I guess I'm counting nightclub entrance fees and alcohol in that number. Yeah, man, the nightclub entrance fees, that could be expensive, and yeah, the alcohol for sure. This is why, you know, you gotta pregame a little bit. All right, just, you know, save a little money. You know, if you, oh no, sorry, that is actually the wrong advice. The best advice is how I follow. Here's another way to save money. You want to save money? Here it is. Okay, here's the video. Do you want to save money on alcohol? Do you want to save money on money? And do you want to save money on calories so you're not going to be getting overweight if you're going to be going out drinking? So here's my advice, Anthony Ventures' advice. If you're going to drink, you should drink every 3 months, like a good business, quarterly, right? Earnings report, you could drink. The reason for this is your tolerance is going to be down immensely. Obviously, the calories is going to be down immensely. Your health is going to be up immensely. But what this is going to do is every time you decide to go out, you know, every single time you decide to go out and go to these places, you can have one drink, max 2 drinks, and that's it. You're already at that good level. You're at that level that would normally take you like 5 drinks to get in. And this way you save money, you save your health, you save the calories, and you're drunker faster. I'm sorry, there's no other way to live. I think beer is a waste of time because why am I going to spend money for something that has less potent effect and doesn't taste very good? I'm just going to not drink very often, and then so the times that I do, a lot more efficient. So if you're gonna do it, that's how I would do it. That's my controversial advice. Sorry. Uh, Call me next time you come to Epcot. I would love that park. Drink and eat around the world is amazing. Yeah, Epcot is so much fun. Can't wait to go back. Sandra says, I have heard conflicting reports. Equinox splitting. Oh, is that a thing? Equinox splitting. Interesting. So I guess maybe you can take advantage of 2 platinums for Equinox credit. Sandra, never tried myself. I live in Tennessee, so yeah, you don't have any equinoxes, huh? Yeah, I know it's a New York, Florida thing, right? Or California too? I don't know. Doc says ROI was obtained. Don't worry, Anthony. Should have done the winky face. Okay, so Doc did get an ROI on all of his million lavish dates. Okay, good. Anthony Jones. Anthony, fellow Anthony. Anthony, are Amex co-brand cards worth it? What do you think? Can you give me an example? Like which co-branded cards? Off the top of my head, the co-branded Hilton American Express cards, totally worth it. I mean, for me, I was staying in a lot of Hiltons. I still stay in a lot of Hiltons. I just found that and if you wait a little bit, you can get better sign-up bonuses. But I found with the Hilton card, the initial one with a $0 annual fee, if you wait a little bit enough time, you'll get at least 100,000 Hilton Honors points after you spend $1,000, and those 100,000 points can be worth between $5 and $1,000 depending on how you actually redeem it. I've only found like around 500 to 600 in value from that, but still, you're spending 1,000, getting about 600 back. It's a good return on spend, and you get that much in free hotels. Plus, if you really really like Hiltons, then you're getting bonus multipliers towards Hilton stays, gas stations, restaurants, and then everything else, something stuff like that. So I think for that co-branded card and pretty high credit limits. So if you have a low credit limit, like 2 grand, I got approved for 10 grand, my first ever Amex credit card, not a charge card. So for that, I appreciate it. And if you don't mind paying an annual fee, the $95 annual fee, go with the Surpass card. I mean, that one alone is going to be giving you sometimes a free night certificate with the sign up bonus and 130,000 points. So that's an extra, $900 in value for 2K spend. So again, almost 50% return on your spend and a $95 annual fee. But after the first year, a little bit after that, you could always downgrade, keep the Hilton points, and then you don't pay the 95 after that. So I love the Hilton cards. I think they're super understated. Link in the description of all videos. If you want to use my Hilton referral link, which I saw one person did. I don't know who did, but someone used it. MR says, call the dating advice channel joint venture. Wow. That is great. Joint venture. That is so funny. That is such a good thing. That's why I love the venture name, man. Venture name could do anything. We got venture capital. We got joint venture. We could do a lot of things with the venture name. I like that. Man, I have nothing to write it down with, but I want to write that down. Joint venture. Write that down. Maybe my fiance's watching. Write it down. Doc says, yeah, last year was 25 a month. Now it's 300 per year, and you get it right away. So in 2 months. Oh, really? I didn't know that. So now you can use your Amex Platinum card, pay for the Equinox membership, and get reimbursed the full $300. You get it right away in 2 months. Yeah, you get it right away. That's great. That is so great. Wow. Instead of just getting the trickle in 25 a month, that's a waste. Not a waste, but not as good as getting that lump sum. That's sick. I like that. Jason Lewis says, I was bad at dating. I've had 4 ex-boyfriends. I'm better now. But they could make a sad documentary on my previous relationships. There's a lot of people, man. There's a lot of people that have had just horrible previous relationships. And a lot of it stems from either not knowing yourself or, again, not getting the fundamentals down on yourself and who you are initially. So you end up getting with people that you thought you aligned with or who are enticing, because there's a lot of people I've thought about dating over the years that were enticing and they were interesting, but actually, if you zoom out, they were just problem people. So it's good to get that fundamental analysis on yourself as a human, as a person with a personality, to know what you would even want in the future. But again, you have to experiment to know what you don't want as well. That's a big thing. If you find horrible people, well then, I'm just going to avoid that in the future. So I think it works either way. Life works itself out. I mean, now you have good stories, I'm sure, but at the time it sucked. So I feel for you. Ba 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 ba. So Wandering Duck says, so yes, it is. You could just change your payment method. I'm going to try and test those at the 3 platinums. So yeah, in that case, you could take 2 platinum cards, 4 platinum cards, pay for the Equinox membership, and get reimbursed initially. So they don't have to worry about the month to month. They kind of screwed themselves, huh? Because you wouldn't be able to do that on a month to month. So that's pretty cool. David says, relationship channel. Pick up women, cook them ramen noodles or beans and rice on a date and see their reaction. Yeah, that would be funny. That would be funny. Yeah, right? I took like a Tinder date or something. I took them on a Tinder date. I cooked for my Tinder date. Something, maybe that's the title, something like that. And then you bring them into your house and it's like, yeah, we got ramen, we got rice. Because guess what? If they are against that, immediately they're like, what is this? You know, then they're not the right person. But if they're willing and they don't even bat an eye, like, oh, I love ramen noodles, I love rice, let's do it. They're like, oh yeah, this is the right one. This is the right person for us. Doc says. I pay with the Morgan Stanley in a few days. Going to switch to the vanilla for the next one. I plan on applying for the Charles Schwab version at that time. Yeah, definitely makes sense. Um, Anthony Jones says Nissan cars last a long time. Okay, so that's a good point. Good data point. Um, yeah, that's what I meant. Like I never heard bad things, and it just didn't hear amazing things. So I'm neutral with them. I think they're Japanese, so I think they'll be fine. It's like Toyota. Show just says a lot of these brand of cars depends on where it's assembled too. Avoid any car made in Mexico at this point. Interesting. I guess I didn't consider. Yeah, the build quality, I guess, and where it is. Yeah. Interesting. Anthony Jones coming in saying, Anthony, is your office car a Tesla? You mean my office? Yes, it is. I don't know how I can prove it to you, but you got the look up here pretty much. Yes, it is a Tesla. Doc says, great museum tip, bro. Yeah, the museum tip. I'm telling you, the museum is where it's at for a first date for sure. Anthony Jones, a poor man drink is a Long Island iced tea. Yeah, I agree with that. I usually like to do the Bahama Mama because it's not super expensive. It's fruity, so people make fun of you, so it's kind of a conversation starter, and it's like could be very strong. Like so, I don't know. I feel like it's a trifecta there. Doc says these days I probably drink on average once every 3 months, so that's on point. Yeah, that's it. You need to drink quarterly like a good business. That's it. And then you save everything. Anthony Jones, thanks Anthony. Yeah, the Hilton. Thanks Anthony. Yeah, the Hilton Honor or Marriott Bonvoy Bevy card. Yeah, so the Hilton Honors I like you heard me just say, and then the Marriott Bonvoy cards, the Bevy and the was it the Bountiful? I don't know. They just didn't seem like a good value proposition. It seemed like you got to pay what is it, $250 annual fee, and you get like a few $100s in credits. I haven't looked into it since they came out, but I don't personally. I don't just because I don't even know the specifics at this point now. But I know when I made that video on those cards or I mentioned them, I just didn't care for them at all. I didn't care for them. I sooner cared more about the Bonvoy Brilliant, which has like a $550 annual fee because you're getting the $300 restaurant credit, status with Marriott, and a few other things. So I appreciated that. Oh God, can you guys hear me? I'm frozen. Oh no. Sorry. Okay. Look at that. We were frozen. Thanks you guys for letting me know. I thought we were actually talking about the movie Frozen. Let's see. Are we back? Yeah, we're back. Okay. We can hear you, but your video is frozen. Oh no. Thank you for letting me. He's as frozen as Elsa or Olaf. He's as frozen as Walt Disney or Ted Williams. We can still hear you. There you are. Back from being frozen. He's as frozen as Walt Disney. Yeah, maybe one day I would like to be frozen. Not like that though, so you guys can still see me moving around. God damn it, Jason! You were frozen on your arm, so it was okay for me. Unreal. That's funny. Okay, so the reason it froze is because the battery is lower than 20%. So it alerted me that you're below 20%, so it stopped everything. Thanks, John, and everybody. So we'll probably wrap up soon. I think we're going 2 hours. Oh my God, that went by so fast. So I like the style. So I started the first like 20 minutes just on a rant. Thank you for the hat. I went on a rant, Anthony. I went on a rant about the stock market and getting invested, getting started, the psychology of it. So I guess it's just a thing to remember is all those things I said at the beginning. I'll put timestamps and stuff, and then we'll see what we do afterwards with it. But So that I like that, and that kind of propelled the conversation. So I think I'm gonna keep doing that. How did you? By the way, so if I can get some feedback for you guys before we leave, um, although I might stay in a little bit. Um, what do you guys think about the thumbnail that I used for this live stream? It's different. I'm thinking I'm gonna start experimenting with different ones and different content and all that. So you guys are the first to know that. But just does it look enticing? Give me honest feedback. With all that stuff. Um, they might just so you guys know there might be some changes for the channel a little bit going forward. Still with the same credit card content, but then some other stuff added in. A lot more entertaining stuff. So I think you guys will like that. Going up to people on the street too and all that. So it's interesting. So I don't know. We'll see. See how it works out. Um, Sandra says you took us on a nice adventure. Yeah, it was a nice adventure. So, um, yeah, I guess so that the phone doesn't die. I'll wrap it up. So thank you guys for being here. This was the fastest 2 hours I've ever lived in my entire life. I cannot believe how fast that went. Hopefully you guys got some value for the stock market. We talked about real estate, talked about how to save money in budgeting, Tesla and investments, a little bit of life and dating and relationships and all that stuff. So hopefully you guys found some value from it. Um, oh, one more thing before I go. Uh, before I go. So uh okay, just before I do that, Jason Lewis, the thumbnail is okay, but doesn't look YouTube polished, if that makes sense. Yeah, I figured I literally made it like 20 minutes before I came out, so I think I'll dedicate a little bit more time to make it look nicer, but thank you. I appreciate that. John says, I do like the live streams and some of the ideas you mentioned in this live stream. Sounds good. Um, so you guys will know first. If you guys aren't in the Discord, I'll put it in the description of this afterwards. Safe driving, Anthony. Thanks for being here. Uh, thank you, Jason. Absolutely. Um, but if you're not in the Discord, get in the Discord because we're going to be doing a new giveaway for extra wallets next month. So it's still gonna be a little bit of time, and I have to figure it out. But just so you guys know, I'll be doing. Oh, Danny Boy's in now. Come on, you can't be coming now. Oh no, Danny Boy. Danny Boy, it's really not that early. I mean, I'm on here from 12 to 2, so that's like 9 to 11. Like, I mean, that's not super early. Come on now. But I've been extending it just for you, okay? But Exter did send me a few wallets, and I'm gonna be reviewing them and stuff like that. And I'll probably doing a giveaway of one wallet next month, so you guys know about it. So if you're not in the Discord already, then let me know. But we still have to work it out. I don't know. I think so, but I think we're gonna be doing a giveaway. I have to message them, but and then so giving away your wallet after you had me buy it a few days ago. Not fair, Anthony. Well, Jay, I didn't know about it. It's the new thing. I wasn't aware, and it might not even work out anyway, but we'll see. But at least I'll be putting that in the video, so whatever. But at least you guys are first dibs and stuff like that. Or at least knowing about it, getting the Discord. But have no fear, Jason. There'll be other things. There will be other things. If I had known about it sooner, I wouldn't have said like, "Oh, here's my link and everything like that." But again, there can only be one winner, and there'll be a good amount of people. So we'll see. But yeah, thank you guys for being here. This was a lot of fun. Hopefully, you got some value and stuff like that. But I guess I'll be back next Saturday. So yeah. Thanks for being here, guys, and I'll see you next Saturday at 12 o'clock sharp. And Danny Boy, sorry, but I have to go now because the phone is dying. Okay. Bye, guys.